What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I literally just finished my exam. My adrenal glands are still kicking in. I did really well. And that's the thing about taking classes or being in, any program or school, just like dividend investing. Set the tone early, do really well, and, park your money in, and then it won't be as hectic in the end because the dividends will start doing the job for you. The compound interest will kick in, and it's just like my class. I mean, I have an A right now. I did really well, but hey, just keep on maintaining it and keep on going. And these dividend stocks, I'm going to tell you something. The dip is there, and with the market going up and down and fluctuating, these stocks took a hit. Their dividends are starting to go up. Their price per share is starting to go up. These are high yield dividend stocks. I own two of them, and I plan on buying more, and I'm going to potentially buy another one. So make sure you smash that like button, and let's check these stocks out right now. That first stock is Sachem Capital Group. So I own this one right now, and the thing is, it's sitting at $5.40. It has a dividend yield of 8.89%. The PE ratio is 13.32. The volume is 449.02K. The market cap is 170.42 million US dollars. The range is $4.35 and $6.55. So its day range is 537 to 545. So you notice the huge dip during the pandemic right here. So it was its worst 199. Now it's at tracking at 540. It was 620. So it was at its peak at 620 in the past 5 years. So this is what makes these guys interesting. And my E-Trade dividend portfolio, leftover money I have, I throw them into this one. I throw them into other ones that are cheap. And you got to check these guys out. I'll do a review on them to a lot of you guys that are new. So on their website, Sachem Capital is a Connecticut-based real estate finance company that specializes in originating, servicing, and managing portfolio for the first mortgage loans. So right here, strategic lending at Sachem Capital, we seek to maximize our risk-adjusted returns and preserve and protect capital through our discipline and credit-based approach. Leadership. Our leader has successfully originated and serviced our portfolio in short-term real estate mortgage loans, generating attractive annual returns under varying economic and real estate market conditions. Ding, ding, ding. So these guys fluctuate, and there's a dip. Mission statement. Sachem Capital was created to serve the financing needs of real estate owners and investors. We match the needs of our borrowers with capital from our investors and shareholders who entrust us to make prudent investment decisions. All right, let's see how they're doing revenue-wise. These guys generate a ton of money. The symbol is SACH. This is why I'm buying these guys. And I stand by this. And again, this is not financial advice for entertainment purposes. Only disclaimer in the description. But look at these trends. This is in millions US dollars. 1,000, 2,000, 4,000, 6,000, 11,000, 12,000, 18,000. They're doing something right. The revenue is going up. That's one thing that's very important with real estate investment trusts, business development companies. I want to see an increase in revenue. And the dip is there, and I'm going to go over their dividend history. Something is relevant here, and we're noticing a trend. So 2017, it was 5 cents, and then it hit 10 cents, then it hit 11 cents, it hit 12, then it hit 17. Again, it's mortgage-backed REIT, it's cheap. It's stagnant at 12 cents. So it's sitting at $5.40 with an 8.74% dividend yield, a PE ratio of 12.56, and an annual dividend of 48 cents. That's a very attractive, cheap dividend stock, and that's why I'm buying it. So I'll buy shares of like Store Capital or something. I'll have leftover money. I'll throw it in these guys. This is the nice thing. So my goal is to get to 100 shares, maybe even 200, and then see what happens because, I mean, these guys are cheap. And, they have a pretty nice dividend. So why not? I'm going to jump to the next dividend stock. And during the pandemic, this stock took a huge hit. Invesco Mortgage Capital, IVR is a symbol. Its previous close was 264. Day range was 259 to 265. The year range was 237 to 460. So there is a dip. Market cap is 807.41 million US dollars. Its volume is 4.95 million. The PE ratio is 8.01. The dividend yield is 13.9%. That took a hit. So there's a reason why I bought these guys. Again, mortgage-backed real estate investment trust that took a pounding. Now this is a risk. I'm gonna tell you these three are a risk. They're cheap, but I'm gonna show you a few things that made these guys attractive. I actually bought some shares today. My leftover money, I bought HTBK again, the bank stock, and the leftover money I threw into Invesco Mortgage Capital. So I'm gonna go over the revenue with these guys real quick. I mean, you want to talk about beating. Look what happened to IVR in its history. So this is in millions US dollars right here. That is 687, then 650, then 478, then 545, then 643, then 778, and then 280. Huge. They got a huge pounding, a beating right there when the pandemic hit. Price per share dropped, revenue dropped. There's a dip. So that's something that's very attractive. So I bought the dip in these guys, and I'll show you their dividend history. Now, this is a dividend stock that is a risk. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But I study the dividend trends. And it's going to take years for these guys to recover because of the pandemic. And, who knows what will happen? Is there a market crash? Who knows? But right now, I'm going to capitalize on the dip with these guys. This one's a risk. 2013, it was 65 cents. 2013, again, it hit 50, then it hit 45, then 40, then 41, then 42, then 45, then it hit 50 cents. Pandemic hit, it was 2 cents, then it was 5 cents, it was 8 cents, it was 9. So just by looking at the dividend trends over time, I'm hoping the dividend increases just based on their history. Now, again, it's not a guarantee because these guys, took a huge hit. And it's not going to get back to 50 cents in a year. I don't think it will. But it's something that I'm going to be patient, throw leftover money in, and see what happens. I will take a risk with these guys. PE ratio is 7.85. Annual dividend is 36 cents. Dividend yield is 13.43. But again, remember, mortgage-backed rates, real estate investment trust, FFO is the most important thing. The revenues, it appears to be slowly improving, but it's not as fast as like stocks like Store that took, or certain, real estate investment trusts that were extremely strong that took a little bit of a hit and rebounded. This one's going to take time. And I'm going to jump to the final dividend stock. Here's another dividend stock that I owned and then I sold, and maybe I'll buy it again. MFA Financial. MFA is a symbol. It's sitting at $4.50. Has a dividend yield of 9.78%. A PE ratio of 6.85. The volume is 3.46 million. The market cap is 1.99 billion US dollars. Year range was 379 to 490. Day range was 447 to 453, and its previous close was 451. So what is it about these guys that have my interest level high? A high interest level right now for being a cheap dividend stock. So MFA Financial is a real estate investment trust primarily engaged in the business of investing on a leveraged basis in residential mortgage assets, including residential mortgage-backed securities and residential whole loans. So they're sitting at 450. So we'll check out their revenue. So here's their revenue in millions US dollars. 463.817, 492, 457, 433, 455. Then 2019 they went up 581, and then the pandemic hit 359. So they were improving for the past few years. Now, is this a long-term dividend growth stock? I'll go over the dividend history with you. Okay, so here's 2013. It was 22 cents. Then 2014, it was 20 cents. It's a little bit of a dip. 5 cents, 7 cents, 10 cents, 11 cents. It's sitting at 447, and it has a PE ratio of 6.92, a dividend yield of 0.69%, an annual dividend of 44 cents right now. So the dividend growth isn't the best, but there is a dip, which makes these guys very attractive. They're less than $5. This one is on my radar. I may just do it for dividend income and reinvest. Kind of like how people invest in NLY stock or Prospect Capital as a business development company, or AG&C. Usually you're not going to see dividend hikes from these guys with those type of stocks, but it's 20 cents and it's sitting at 447. So let me know what you think of this video. If you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. Have a good one, and thank you guys in the comment section for giving me some support. Taking this exam, I ended up getting a 91%. So I made sure to post a video, and this is kind of a stress reliever because my adrenal glands are still kicking in. I put a lot of time, a lot of effort into studying for this exam, and it paid off. That's the same thing with investing in your dividend portfolio. You put the money in, you work hard making your money, you park it, you reinvest, and it pays back, usually. Pays back dividends. Ha ha ha, just bad joke. All right, take care.